I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending December 21st and the last cattle market summary for 2018 here. And everybody's always looking for opportunities ahead, and I think if you look ahead in the landscape that we're in right now, we can see that this 2019 board is undervalued. I know it's not always a good idea to buy the board, take long positions. It's hard to find people to do it. People in the industry don't normally do it because they're normally on the short side, hedging their long positions in the cash market. But hopefully we will have some investors, some fund money, managed money come in and take a long position on some of these contracts in 2019, because it sure looks like they're undervalued to me, and I think if you guys look at it, you think the same thing. But look at the board for last week, December live cattle futures. Monday was down 55, Tuesday up 75, Wednesday down a nickel, Thursday up 50 cents, and Friday up 65 cents, with December contracts ending the week at 120.87. That was up $1.30 for the week, and we've had kind of support from the board the last couple of weeks. We're not used to that, don't really know how to respond to it. February contracts ended the week at 122.70, up just 30 cents. You look at the April board, which it's just nearly impossible to buy find any big hard green feeders that could finish out in line to hedge off the April board, but it ended at 124.82, so almost $125 on your April 2019 contract. Then all the other traded contracts for 2019 are below 118. I think that's a little bit cheap. I think the supply is going to be in the cattle feeders' favor several different times during 2019, and I just think that there's going to be more opportunity than that, and to be below 118 from April on till April 2020, mind you, that's a long ways there for a year below 118. When we've got this good of domestic beef demand and export demand, and that's just continuing. None of this upheaval in the markets and everybody being down on Trump is hurting that. We've got excellent demand for beef. We had huge supplies in 2018. We worked through them just fine. Your packers have been having record years on profitability. They're going to continue to harvest cattle at a high rate, and I think as supplies at times get kind of back in the cattle feeders' favor, I think we're going to be having a chance for some better markets than that. But January feeder cattle contracts, Monday was down 220, Tuesday was up 82 cents, Wednesday was unchanged, Thursday up $1.22, and Friday down 7 cents. For January feeder cattle contracts ending the week at 147.35, that was down 22 cents for the week. March ended the week at 145.52, down a quarter. And August, if you look out to August 2019, that's always our big feeder cattle month as far as a big price. That's when those real hard green yearlings are coming off of the pastures. And your big grazing areas out there, always big demand for those cattle. There's not many of them whenever you're trying to buy them to turn them out, and everybody's wanting those green cattle. It's only 149.77. You know, that's not far from where we're at right now, and I think that our calf numbers are going to start to be kind of light as we get into the spring, and there's not going to be a lot of those cattle around. I think that there's opportunity there. I think that could sure be higher, but who knows. Let's look at your fats for last week. Through Thursday, they had sold 46,800 head, mostly all in the Northern Plains, because the Northern Plains had quite a bit of trade there mid part of the week, but the Southern Plains had still not hardly sold anything at all, really waiting on 120, which never actually developed. But through Thursday, almost 47,000 head. That's pretty good for a week headed into the holidays there. But your live sales ranged up through Thursday from 115 to 120 and a half, and that 120 and 120 and a half was not very widespread, and it was mostly just on some shut-up cattle that were really clean and in confinement barns with slats. Because your packers are not really wanting to give live bids as muddy as some of these cattle are, much tag as they're carrying, and the low dressing percentage that they'll have whenever they pull that off. But at 115 to 120 and a half, and mostly 118 to 119, you know, that was sure $1 higher, maybe $2 higher in spots in the northern plains, because they'd kind of been suffering on your live bids. But through Thursday, mind you, there mostly on the northern plains, your weighted average on live steers was 118.76. That's pretty darn good. That's real close to 119, and you don't hardly get that close to one figure when the whole 5 area sells at one price. But your dress sales were fully $2 higher, mostly 190, and mostly everything at 190. And in fact, your dress steer weighted average in your 5 area feeding region through Thursday was 189.96, and that weighted average price would be $2.50 to $3 higher, not just the fully $2 higher. But Friday we did see significant trade in the southern plains, and mostly all at 119. We just could not quite get the 120. Guys wanted to go ahead and get the 119 taken before everything really slows down for the next 2 weeks here due to the holiday season and just people being gone, not much going on. So, you know, we did see some 118 to 120 in Iowa, so continuing to be good up there. Iowa has been sucking hind tit on the market here for several months, and all of a sudden they've got enough confinement facilities with some clean cattle in them that they're selling pretty good, and they're not suffering with the big supply problem like they were here the last, over the last 2 or 3 months. They've kind of got that under control, got the heavy cattle under control, selling pretty good. They also sold some dress sales in Iowa from 188 to 190, but I wouldn't be surprised if after hours we didn't see a little bit of 120 somewhere in some spots from some packers that needed some cattle just to go to certain plants. But it did not get advertised anywhere, did not get reported by mandatory price reporting, and now that we're shut down for the holidays, it's not going to get reported till Wednesday, because President Trump give all the federal employees Monday off, Christmas Eve anyway, and that's typical when you're kind of just spread out short time from a weekend to a major holiday. So they're going to be shut down for the holiday break, holiday pay on Monday and Tuesday, Christmas of course. Then been big talk about the government shutdown. Most of you know I worked for the federal government for a long time, 18 years, with Market News before we fell victim to government shutdowns. It's all just political. Everybody gets paid whenever it comes back. They've never had a time when they didn't get reimbursed. And also, you're not running into the end of a pay period either. So the pay period's end at the end of the year, so it's not going to be a big deal unless it goes on for more than 2 weeks, which shouldn't be a big deal. But I guess now they have deemed a lot of this market reporting as needed, so they are, as planned so far, going to have federal reporters come in, and the state guys work anyway. State reporters sitting in most of these auctions, they'll continue to go out, but you may have to go to the state website to get their reports unless they get fully staffed on the federal side to put it on the USDA website. But USDA will have averages if everything goes as planned. Even if we continue to have a shutdown, they will have weighted averages on the fed cattle trade for last week through mandatory price reporting to price a lot of these grid cattle off of middle of the week, which is good for producers, because sometimes whenever those aren't available, the packers just kind of make them up, and guess whose favor they go into whenever they do that. But box beef cutout values, the average of last week's trade on choice cuts, $212.71, down 40 cents from the previous week. Selects were a lot higher because there's just not much select product out there. Remember we talked about how unbelievably good the grading is. with nationwide, like 82% choice and prime, doesn't leave a lot of cattle to be select there, because you've got some cattle that are going to be dark cutters or no rolls, different things, hard bones. So we've got light select product. In turn, you're going to have a better price on that. The average of last week's select product, 205.22, up 361, and now the choice select spread on the average of last week's trade was just under $7.50, and just kind of a moderate trade, as you would expect reading into a holiday, at 534 loads of cuts, grinds, and trimmings. Your slaughter for last week was very impressive. You heard a lot of analysts, a lot of predictions that they were going to lead into this holiday break on a downtrend of harvest, but no. Like we said, these packers are making money. They're going to keep their foot on the gas. A lot of them had a Saturday kill, but they may be off Monday for Christmas Eve and Christmas Day. But last week's slaughter, due to the heavy Saturday kill, 659,000. That was 5,000 more than last week, which was 2 weeks out from a holiday, and 48,000 head more than the same week a year ago. But with that 659,000, your year-to-date cattle harvest now, so far for the year, and we're there, is 2.6 higher than the previous year, which is very significant. 2.6 is a lot. But look at some of the other things that have affected the cattle trade over the last few weeks, leading to the end of the year. That our fuel is so cheap that these ethanol plants are suffering, and we're starting to see several of them shut down. We're seeing a lot of them cut back, and most of us are enjoying these cheaper fuel prices. But with the ethanol plants slowing down so much, we are not seeing near as much distillers product come out the back end, and especially in the northern feedlot areas. Those feedlots really rely on distillers products in their rations. They've gotten used to them. That's how they feed their cattle. They're keeping the price down on them, but now that product is so heavily demanded and there's not much of it, the price on it has gone up significantly here in just the last few weeks, and it's going to get higher and higher. So guys are going to have to go back to the drawing boards with their nutritionists and see what they can do to keep their feed costs down, and try to keep their cost of gains that they had projected on the cattle they got on feed now somewhere close to what they had, so that they don't miss their break evens any further than what they have to. But you look at, I want to talk a little bit about your sale barn industry. You know, 25 years ago, or 30, I guess, getting close to, when I was in college, I'd done several papers, including a graduate thesis project on whether, how the auction market was going to happen, keep going with cattle, whether video auctions were going to take them all over, which they're very healthy. We see a significant number of cattle sell on video auctions, and now internet, which we didn't even know about internet much back in those days. But it looked like your on-site sale barns, your brick and mortar sale barns, were going to suffer. We were seeing more and more direct trade, and we thought there would just kind of be some regional sale barns out there, maybe a Saturday mom and pop sale with a goat, sheep, pig, and milk cow or baby calf deal. But that has not really happened. We still need sale barns. We still need something to get the price discovery out there. All your country trade is based on what's happening in the sale barns. All your trade anywhere, contracts, anything, is based on what's going on in the sale barns, because you just can't find a substitute for running your commodity right in front of your buyers and have them sit across from each other and compete on how much they want to give for it. That's the only way you can really do it. And in turn, your sale barns are as healthy now as they've been maybe forever. We've got big barns. I was talking to John Cooper there at OKC West, El Reno, Oklahoma, which is our biggest market here in the United States. They were over 490,000 head sold through the ring this calendar year, which is fantastic. It's the second year in the row that they just barely didn't quite get 500,000, and I would say that they'll probably break 500,000 coming up this year, because they are starting to get probably more share in that area. But that's fantastic. Oklahoma National Stockyards are still getting huge numbers there. Joplin Regional Stockyards getting big numbers there. The whole state of Missouri is a big auction state. You don't see hardly any direct trade in the state of Missouri, and because you got so many good sale barns. And the same goes for places like South Dakota. You do see a little more direct trade in Nebraska and video trade in Nebraska, but why would they whenever you got places like Bassett and Burwell, Valentine, Ogallala, all those good sale barns out there, that you just get these astronomical prices that you would not have the guts to ask any buyer for out in the country. But your sale barns are healthy. We've found ways to bring cattle in by truckload. You can schedule them in where they don't have a lot of shrink. There's not the producers are getting good about maybe sexing the cattle before they come in, so there's not a whole lot of undue sorting at the sale barn, which causes additional shrink and stress. But I tell you what, it's just a good thing to see, and I am a huge supporter of sale barn markets, and that's really what we're doing here with Cattle Market Central, the Feeder Flash, supporting the sale barns, talking about big strings of cattle that's sold in auction markets, in public auction markets, when a lot of people say, well, if you got a potload of cattle, why would you go to a sale barn? Because they bring more money there, and you get a good bonded check there from the sale barn that you can trust, and you can take right to the bank and cash it. You don't have to worry about that. And it's just it's something that does my heart good to see these sale barns doing so good, and I hope they never go away, because as long as we have healthy sale barn markets, then your feeder cattle market will not go the way that our fed cattle market is going, where we don't have any competition in it, and we're starting to lose all the leverage in there, and there's just fewer and fewer negotiated trades every day, basically. And our sale barns are keeping that away from your feeder cattle market. But don't you worry, the vertical integration will start coming down on your feeder cattle, and they'll start wanting to contract those cattle right from weaning, so they can get their hands on their feeder cattle supplies, which in turn will keep their captive supplies for fed cattle. But let's stave them off as long as we can. Big thing last week was your cattle and feed report come out neutral. Should not be a market mover. It wasn't on Friday, so we're not going to talk much more about that. Let's look at your feeder cattle markets for last week. Your cash feeders in your auctions, feeder cattle were firm to $4 higher. Just good. We pretty much in the last 2 weeks gained all that position that the feeder cattle and calf market lost that first week of December, which was really a wreck. But had 2 good weeks since then, and pretty much made all that ground back, maybe even more on some fancy steer calves. But your calves in your sale barns this past week, $3 to $6 higher. Full advance on the steers. Just not a lot of love for heifers, but especially this time of year, people turning those cattle out, dry wintering them, or turning them out on wheat pasture, those lighter weight calves, and then they'll go right to grass with them. And what they really want is big loads of grass yearlings coming off pasture this summer. But your real-time index on Cattle Market Central ended the week last week at 145.47, and that's pretty darn close to your CME cash feeder cattle index, the last reported at 145.87. So 40 cents there on a real-time index that you can keep track of just anytime you want to. And but that 145.47 on your RTI was up $2.24 from the end of the previous week. A couple of individual quotes. I'm going to start lighter and get heavier. Shasta Livestock Auction there. I call that Merle Haggard Stockyards in Cottonwood, California. The Peak family there, a lot of good friends that work in and around that auction market. They had a big calf quote. I'm talking about way out west. Throw a rock in the ocean. 65 head of 529-pound steers bring $174. You can't hardly get that anywhere, guys, and that was on Friday. Mitchell Livestock in Mitchell, South Dakota on Thursday had a big quote on middleweights there on some black baldy steers. 80 head of them, weigh 698 at 163.70. Wow. The auctioneer had to go to dimes to drag that much money out of them there, but awful good. And then a big quote late in the week last week at Columbus Sales Pavilion in Columbus, Nebraska. 53 head of 876 pound steers bring 151 and a quarter. This is going to be your last cattle market summary until 2019. Your feeder flashes are going to be kind of sparse here because there's not going to be anything to talk to, and I can only pull so much of this stuff out of the air. I know you think I pull it all, but I gotta start somewhere. But probably won't have any feeder flashes till late next week either. But I tell you what, I appreciate everybody that watches this report. My viewership has increased exponentially in the last year or so, and I appreciate all you people that watch it. Tell your friends about it, and guys that share it on social media in different places. But just very humbled and appreciative of how this report has grown, and I look forward to doing a whole nother year of it in 2019. And from a home DV auction office here in Canyon, Texas, have a great new year.